If you are one of the millions of Americans who cannot buy a house, you are not alone. According to the Wall Street Journal, the American housing market is fading further and further out of reach for the middle class and, above all, for the young. The past 3 years have been brutal for housing costs, driven by 4 factors: soaring house prices thanks to the Fed, soaring mortgage rates thanks to the Fed, soaring home insurance thanks to Congress, and just last week, a massive settlement by the National Association of Realtors that could slash commissions but could saddle buyers with even more costs. So how did we get here? The story begins with the Fed printing $6 trillion to bribe voters into lockdowns that sent inflation soaring, which took house prices along for the ride. Then, to fight its own inflation, the Fed jacked up interest rates, setting mortgage rates from 3% to 7% today. Put them together, and the average payment on a new mortgage doubled to nearly $3,000, which is almost half the median household income just for the mortgage. In fact, one study found that just 16% of houses are affordable to the median American family. The rest are priced out. Predictably, the housing market seized up, with new home sales dropping by nearly half. At that point, Congress piled on with home insurance. I covered this recently, but government mismanagement of fires and floods have left nearly half of American homes exposed to catastrophic insurance risks. Combined with lawsuit-friendly policies, these sent insurance prices up 40% or more. So in Florida, the average policy now costs nearly $8,000 per year. Insurers are quitting California altogether, and tens of millions of Americans are going without home insurance, going naked in the industry lingo and hoping for the best. And finally, the realtors. Last week, the National Association of Realtors settled a bunch of lawsuits claiming they had fixed commissions. One industry analyst thinks this will slash commissions by a third, and it will slash the number of realtors by up to 80%. So if a former realtor is making your pumpkin frappuccino, be kind. Note, the average home sold in the U.S. last year paid 5.5% commission. In Canada, it's just 3%. The UK is at 2.6%, Holland runs 2%, and Sweden is at just 1.5%. Now, as a result of these lofty commissions, of course, America has an astounding number of realtors. The NAR claims 1.5 million dues-paying members. For perspective, that's about twice the number of farmers in America. So if commissions were to fall to, say, Canadian levels, you'd save about $12,500 in fees. If they fell to Swedish levels, you'd save closer to $20,000. So far, so good, but the problem is currently commissions are paid by sellers. After the settlement, buyers may have to pay. So if you're buying a home, you'd have to pay the agent before they lift a finger, maybe an hourly rate or a lump sum contract. This could mean all those thousands end up going to house sellers, leaving buyers to pony up even more cash. So what's next? Brought to you by Unchained.com. Housing in America has gone from a financial bedrock to a casino, where Americans are divided into life-changing winners and losers according to where they bought in the Fed's boom-bust cycle. Between prices, mortgage rates, and the insurance and commissions piling on, anybody who missed the Fed's great COVID giveaway could be stuck renting for life. A recent study found that fully 2/3 of American renters have given up on ever owning a house, while another study found that Gen Z is, quote, the most pessimistic generation ever. Unless the Fed gets out of the casino business, it only gets worse. Okay, we'll be watching. See you next time.